Felix here. Yesterday was one of the worst days for hedge funds in many, many years. Why? They got squeezed like a lemon because they were short most smaller cap tech stocks, not the big ones, not the Nvidias, not the Microsofts, but the smaller ones. And because the market went up regardless, they were forced to unwind their positions, which means they have to buy the stock, which they didn't want to do because otherwise their losses would just stack up. So be careful when you're shorting it, can bite you in the backside. And if you look at many of the stocks from yesterday, like NEO or something like that, for example, here went up a whopping, how many percent? Let me, what happened to my screen? Here we go. Almost 8% yesterday. I did a little trade yesterday on NEO. It went up 22% made in a day, which is pretty nice. But if you look at the short volume ratios, they've actually all come down a little bit today compared to yesterday. We're still at fairly high levels, still at 21%. If you look at the previous short squeezes, this one here, we were at 21%. Here we were at 23%. With this one, we were only at 18%, and we still went up. So it's entirely possible that this continues because people are still in these trades. Not everybody has unwound, and you never get glowing buy signal here from my little indicator there. It basically screams buy. Not saying you should, of course. None of the following is financial advice, but I want to walk you through a couple of these, and then we look at what's actually going on today. So here is Palantir again. Now has a short volume that's at 20%. That's below the average. The previous squeeze up, I did a whole video on that a couple of days ago. We had 30% short volume. So we were at lower levels, but still the pain trade was definitely there yesterday for hedge funds who are shorting these kind of tech stocks. Now, the big tech stocks, your Apples, your Microsofts, your Googles, they didn't, because if you're a hedge fund and you're a reasonable size, you can actually influence the movement of a stock if it's a smaller market cap, but you can't really move a $3 trillion Apple stock. So you're just not going to bother, right? That's essentially what's going on there. But nice recovery here from the big tech stocks. This is pre-market. You can see Apple is up, Microsoft's flat, Google up 0.4%, Amazon up 0.2%, Nvidia 0.5 percentage point up, Tesla up 0.4%, Meta up 0.4%. So the market actually looking pretty healthy this morning. And that's really happened in the last half hour or so. NASDAQ up 0.25 percentage point, volatility down some more, the dollar basically flat, lumber prices up. If you're a lumber trader, I doubt many of you are. There were a couple of really important data points as well that came in yesterday, and I appreciate you all joining. And put in the chat where you're joining in from. It's always nice to see where everyone's based. We had this fairly shocking data point yesterday. Used car prices month on month, they fell 4% in value. Last month, the month before, it was 2.7. That's a pretty big move, one of the biggest moves we've seen in a long time, I think since COVID. And now year on year, used car prices are down 10%. And it's not all Tesla's fault. It's just the consumer also just not buying things they don't really need. We had 4 Fed speeches yesterday. I'll run you through what was said here in a second. And we also had consumer inflation expectations. And this is a positive. This is a good one for the market because the consumer is expecting inflation to moderate more than we were expecting. 3.8% is the consumer's inflation expectation versus 3.9% expected. So that's pretty good. That's definitely pretty good. Wholesale inventories, I don't think it really just tells us anything. It's zero anyway. But let's have a look at what the Fed said. And of course, guys, put your questions in the chat here. And Richard asking, you can't make the webinar today, but it's much better to join it live. I'll gladly send you a recording of it afterwards. But then, you can ask questions. It's a lot more engaging if you're actually there live. So we're running this one here even shortly after this, in a couple of hours, where I'll teach you my entire strategy. I'll give you a workbook, and then we'll actually do some trades together. We just go out and look for some, and I'll accept and reject some, and you can see the strategy put into practice. And I think that's always the missing piece, right? Theory and strategy is great, but you need to see how does this actually get implemented. So check it out, felixfranz.org/webinar for the last chance to grab a seat. We kick off at 11 a.m. Eastern time today. Now, these are the 4 stooges from the Fed who said, Barr said, inflation is still far too high. That's obvious. statement. Rates close to restrictive, but Fed still has work to do. That's sort of a neutral statement, I would say. Mester saying interest rates need to move up somewhat further. So that's sort of like, I'm on board with a 1/4 point hike because they put a gun to my head. And then we're going to need to hold rates. So he seems to be more of a hold chap. Daily saying inflation printing too high, printing being the obvious word here, because you printed all the money, you muppet. Likely to need a couple more rate hikes. Risk of doing too little on rates outweighs doing too much. So he's a hawk. Bostic saying we may need to do more on rates if expectations are anchoring, and they didn't. They came in anchored. So comfortable to let restrictiveness play out. So he's essentially saying neutral. So it really is only Daily here out of those 4 stooges yesterday that we're talking about, much higher rates. Jersey, Melbourne, Ohio, you're everywhere, people. Smaller space, brilliant. I'm looking forward to having you on there. Karim there, hello to Istanbul, Athens, Singapore, lovely. What time is it in Singapore? Oklahoma, 8% day for SoFi indeed. Winston needs to eat a tree today. Yeah, he's got some ambition, hasn't he? If you've seen those videos, he just doesn't pick up a stick. He just picks up a whole tree. Well, he doesn't pick it up, but he'd like to. Good morning, everybody. Tesla short 65% last night. Tsunami coming. Let's have a look at that, actually. That's kind of fits in with our theme here today. Short interest is 44%. Wow. Yeah, that's very significant. What was the last short squeeze? 39%, 26%. We actually went down. 31% we went up. So did we have a really big one here? Big short squeeze? I think the most obvious one was sort of here, 39%. We're at 44. Yeah, if that thing goes up significantly, there is going to be some pain on Wall Street. Someone's going to be screaming, no, why me? 4 days in a row, though, of lower highs. That's a little bit bearish. You can see why they're doing it, but relatively moderate volume. So you just need a bit of good news. And yeah, you could really go up significantly. But of course, none of this is financial advice. Sunny Manchester, that's fairly unusual, isn't it, Gary? How does that feel? He's just like lathering himself with sunscreen. Jerome, what did you miss? I don't know, a dolphin or something where you are, Jerome? So we're looking at short squeezes essentially here, and that's essentially what explains the tech move yesterday. And it was mostly small tech, which also makes sense because they are more sensitive to being squeezed. Tesla straddle maybe, says Kyle. That's a thought. It's a thought. If you have been hanging around Elliot for too long, he's one of our team, former market maker. Let's have a look at Tesla. This is optionswatch.io. Tesla IV is so. Let me go in a bit. So the theory here is that you buy and sell a put and a call at the same price level, essentially. And then this is only a week and a bit out. And then basically above 244, so below 244, you make money, and above 295, you make money. In between, you lose money. It's a fairly expensive setup. It's $2,000. That's a little bit the problem with Tesla. Share price is too high. So it's probably outside of the flutter range for most people, I would say. River, you're in Menorca this week. Very nice. So yes. All right. So futures green and looking a little greener by the minute. The Fed talking yesterday, it hasn't really changed the expectation for a rate hike. We're still expecting it with now almost a 95% probability with a rate hike. Yesterday it was 93, a week ago it was 86, a month ago it was 52. So we've basically decided rate hike is coming. Makes very little sense in my book, but they feel like they need to do something, so they are. Felix, you're probably right. Elliot would probably do something a bit more aggressive than a strangle. Maybe something. No, I don't think that would make sense. Oh, you mean? I see what you mean. You would just say, well, I think it's going to go up, and therefore, you set up something like this, right? And that would cost you $500. You can maybe make that a bit cheaper even. Well, I'm always cautious. So if you were bullish on Tesla, do something like this, it costs you $400. If you're right and it moves up only a little bit, then you make a lot of money. If not, you just make 25%, which is still better than a kick in the groin, isn't it? So yeah, but it's a 47% probability. So you're kind of like, it's a coin toss. I'm not really a huge fan of the coin toss. How long before we get rate cuts? Well, depends on what they break. I was actually working on a video just where we look at every time the 2-year yield has peaked, something breaks. You get an event, as investment bankers call it very politely. I used to do event trading, which basically means stuff happens that isn't meant to happen. And that breaks something, and that causes a significant move in markets, usually downwards. So we peaked the 2-year yield rates in March, and then we broke some banks. So we're peaking again. So what are we going to break next? That's kind of something to look at. And I think the bigger what it is that we break, the more likely they are to hold rates and then eventually cut rates, right? Russell asking, where do you think the dollar is going against the sterling? Well, sterling has really shot up, hasn't it? Really shot up. Let me open the screen there for you. USD, GBP. Let's do the other way around. That's a little bit more intuitive. So yeah, sterling really shot up. Why? Because interest rates are like going to 7% or something. That's very, very much the reason for that. Quite nice for me because I bought a lot of sterling. So it's just the expectation that interest rates in the UK will stay higher for longer than high interest rates in the US. And they're also exceeding US interest rates. That's basically that. Plus, sterling government bonds are really, really cheap. And I think a lot of people are also picking those up, looking for like 20, 30, 40% gains on those. And therefore, they have to buy sterling. So it kind of makes sense. Good morning from Wisconsin. Could this be a long trap? It could. It always could be. It always could be. If you look at QQQ, it's gone up a lot. And yes, we've squeezed people a lot. And everybody who didn't want to be long is pretty much now long. So it kind of, you get to a point where like how many more people can be long, as in how many more people are left and haven't bought yet. But there's still a lot of cash on the sidelines. So we could also go a lot higher. Is CPI going to ruin the party? If it comes in much higher than expected, it would. Expectations are not such. Expectations are for a relatively moderate inflation number, a 0.1% month on month, which would be a 3.1 to 3.2%. If we get a 3 or if we get a 2.9, then we're just like partying like it's 1999. Karim, what are your thoughts on Palantir now it's higher than 16? So 16 was the options resistance there for that. We closed above it. Pre-market, we're up another 2 percentage points. I think this is squeezes. This is literally people who don't want to buy the stock, who are having to buy the stock to unwind their positions. So the short volume is still at 21%. It's still significant, but lower than it was. And if we look at, hang on, let's have a look at PLTR. Probably watch out later in the day where the options chain moves, the open interest moves. 16 is still a lot, 24, but 16, 15, and 17 is almost the same size open interest now as 16. So I would wager that the core wall is starting to creep up, which is positive. And then August, yeah, well, 15 is 26,000, 16 is 24,000, 18 is 25,000, 20 is 25,000. So I would say we're moving up a little bit here. Yeah, there's a fair smattering of it, but we're certainly not moving down, which is positive. And then on the support side, still at 13, 14, 15, bit of a range there. But yeah, I think it's positive. Nothing has really changed here. It's been a buy signal since, May. But yesterday's day obviously was a big juicy green one. So you kind of want to wait today for one of these and see, well, are we gonna hold on to that? The wheel deal says sell puts, sell calls. Yeah, and essentially I agree with you on that. I would just always buy a put and buy a call at the same time, so you hedge yourself and that you avoid assignment like the plague. Do you think Bank of America could be in real trouble? Probably not. I mean, if they are, they get bailed out. They're just too big. So I think it's the small banks I would worry about. Good morning from the Dominican Republic. You're in half in the Dominican Republic and half in New York. You're going to have to explain how you do that. Thoughts on NIO going up and down 5%? Well, it's a volatile Chinese growth stock. But yesterday, I think it was a short squeeze. I think that's really what that was. People having to buy the stock because their shorts were just killing them and hurting too much. And we went above the previous peak at 10.50 and we went above the $10 call wall. And it just got too painful. They had to basically buy. I think that's really what's going on here. And it's a clear buy signal. Pre-market, we're up again. I did a trade yesterday, made 22% in a day on a little NIO trade, which is quite nice, isn't it? I avoid assignment by rolling. But you basically roll the losses forward, right? So if you are able to double down on that, then statistically that'll make money. But I've also had people call me and say, I've been rolling this position for 6 months, so I have no loss. And then I look at it and they're down like $80,000. So it's there is smart rolling, definitely. And then there is denial rolling. So I always want to make sure people are in the right frame of mind here. They know why they're rolling, and then they're rolling for a credit that makes sense. Like say you were bearish on NIO around about here, and you still are, and you just keep rolling, you're up here, well, you made a massive loss, and rolling isn't going to get you out of it, right? Very unlikely to. So, but I'm not against the wheel strategy. It's just, I think it's suboptimal. I think it uses a lot of capital, and it gives you a modest return. It's a decent return, and it's great to learn, but it doesn't give you the big return. Like Wall Street banks don't do the wheel. That's all I'd say to that, essentially. But still a good thing to do. I'm not against it. I'm just saying I think I'd use it as a platform, as a learning platform to learn the next level of options trading. That's what I would say. Righty here, guys. Any questions? Pop them into the chat. If you haven't already, we are running literally in about 3 hours a live trading training where we teach you my entire trading strategy, and we'll also do live trading together. So you can see me put it into action and into practice. And I think it's going to be very eye-opening for many people. Whether you are new to options or not, I still think you're gonna take something away from that. So grab one of the last couple of seats left, and let's have another look at the market. Looking pretty green now. All the mega caps are now green. Nvidia up 0.7%, Amazon up 0.8%. It's looking all green and juicy as the short squeeze continues to support the market. It basically means that everybody who was bearish on this, and then for sort of good cautious reasons, were bearish on the market, but they're short, and that's a moronic thing to do. And then the market goes up so much that their pain is so great in their portfolio, they have really no choice but to buy the stock to close their short position. And that obviously propels the market much, much higher. Is it true that they're going to have to cut rates faster because they hike them faster? If you think it's going to cause a cataclysmic recession, then yes. Good evening from Australia, Joe Bloggs. It's a unique name. Is the YouTube channel bringing any revenue from Google? You mean ad revenue? Yeah, it's a couple of $1,000s a month. It's doesn't, barely feeds Winston, I would say, but it's still there. So, it still pays for the cost of some of it. So why not take it? But I think in itself, unless you are a channel that gets millions of views, it isn't really like significant revenue, at least not from my perspective. What do you think about SoundHound AI? don't really know anything about that. Manny, what does that do? Is that a stock or is that an app that makes your... It's listed. It's listed. What do they do? What it says on the tin? I'm a little cautious with things that say AI in the title, I must say. And how long has AI been in the title for? That's what I'd like to know. It sort of bounced off the 50-day moving average line here. I'd say it gave us a buy signal basically there at 330. We rallied nicely up and then came all the way down again in one day, minus 16%. I have no idea why. I don't really know anything about this stock, as you can tell. 3 AI stocks to make your get rich dreams come true. When you see a headline like that, slowly back away from the website and never open it again. That's what I say. So yeah, I really can't tell you much on that. What's the short thing on that? 26% shorted, but average is 29%. So that isn't really doing very much for the stock. Hello to Germany. Guten Morgen. Thoughts on Pepsi? Well, Pepsi did the really smart thing when inflation kicked off by raising their prices by 17%, and the sugar addicts that you are kept buying it, caffeine and sugar addicts. It's a drug, isn't it? And that did quite well for them. And then they kind of coming crashing down in May for reasons entirely unknown to me. So it's been bearish since basically this day here, 22nd of May. Ever since, it's been bearish, continues to be bearish. Earnings, last earnings was very good for them. Yes, it kicked off that rally. The previous earnings were also decent moves, not a lot on earnings, couple of percentage points. I typically don't trade the really early earnings in an environment like this. I sort of look at it and go like, well, what's the atmosphere like? What's going on there? So we'll have to wait and see what happens. Okay, no sugar. It's still sugar, isn't it? It's just called it something different, some sort of chemical that's essentially sugar that's infinitely worse for you than sugar. Something says diet or light or sugar-free, it's worse than the original, inevitably, because it's some sort of chemical concoction to get around labeling rules. New deliveries numbers are published today. I haven't seen those yet, to be honest with you. I was waiting for those. Normally somebody tweets them, don't they? Insurance registrations, NEO 3,100 for the week. Well, it's not terrible, is it? It's let's do some quick math there. So 3,100 divided by 7 is 442 per day times, say, 30. Sorry. That's 13,000 a month. That's not to be sniffed at. I don't think that's a bad number. It's not an oh my God, this is an amazing number, but it also isn't a bad number. I mean, if you look at the competition, they've done quite well there. Do you think a company like Berkshire Hathaway has a limitless total addressable market? Well, it's a holding company largely, isn't it? It's an insurance company. Well, it's really an insurance company. And what are insurance companies? Insurance companies are essentially funds that you pay a premium to. They hold on to your premium and they invest it. And then they put a little bit aside for, earthquakes, natural disasters, whenever they have to pay out. But they know they're typically only paying out, I don't know, 10% at a time or something. So they can invest 90% of the money. So they just get a bigger and bigger and bigger and bigger pot of capital, and then they buy stuff with it. And that's essentially what Berkshire Hathaway has done, right? So they buy good companies that, again, give them a fairly predictable return. And can they get bigger and bigger? Yeah, they can just gobble up more publicly listed companies, right? What Exxon? What's the oil company? Not Exxon. Can't think of it right now. Or, they now own, 8% of the biggest 5 Japanese companies. So there's a pretty much limitless space for them to gobble up companies that have good margins and good returns. So I don't think it's really an issue for them. Tesla China registrations for only 3,200. That might have been a glitch, or that might have been a factory rejigging or something. They were doing that, right? They rejigged their battery factory and stuff like that. What's the after Warren? Well, again, I don't think, okay, Warren Buffett, very clever man, but his success is sticking to this formula for a really long period of time, right? He's basically old and compounding works. It's not rocket science, it just works. Just most people are too impatient. So as long as you get someone in there who has a similar patience, and because the capital base is so enormous, it's much easier than if you're starting out. If you've got $1 million and you want to become a billionaire, you're going to be doing some stupid stuff. If you've got hundreds of billions and you just need to generate, 10% a year or something, then it's a much easier place to be. So it's more like almost like a wealth fund at this point. So I don't think it's going to be that hard for the successors to essentially continue. Will they necessarily pick the greatest companies out there? I think so. I think not to diminish Warren Buffett's achievements in any way, shape, or form, but it's pretty well documented, like what he likes. So you follow the formula and keep doing it, you basically get there. Key man risk, yeah, I think it's not as important as people might think. It might be a buying opportunity when he does, pop. Why is Xpeng running so hard? I think people like the product launches. I think people like the product. They had some pretty good numbers in the last couple of weeks. Just this week, they seem to be a little bit flat. Autodesk. I've never looked at it. I can't say. So I don't really know much about that, Philco. Have a look also at ROIC.ai, like really dig into it. As I would always say, like listen to the last earnings call or two, and you get a real feel for what's going on there. Andrea says exactly, Apple. And that's much more difficult because Apple has to come out with new innovations, new products, and decide where they're going to put their investment money. All that Berkshire Hathaway is going to do is keep buying shares of good businesses that other people are running. So it's actually, it's the easier business. Being a fund is easier than innovating, for sure. Craig says, Devon Energy pays 9-cent dividend. So I'm not a big fan of dividends because simple maths, that 9 cent inside Devon Energy, let's assume Devon Energy has a price to book value of 3 times. It's about average. I don't know what it is for Devon Energy. Then if the 9 cents were in Devon Energy, they would be worth 27 cents. You sort of follow me. So paying money out of companies is generally a really bad thing to do. So companies do it because they need to retain and attract investors, and they run out of ideas to invest that would give them a better return. And you can kind of see why. Look at that wealth destruction. If you go back on a longer scale, I mean, it might be linked to the oil price, but it certainly lost a lot of money. So if you need to look at the business, not just the premium, the dividend. The dividend is one thing, but fundamentally what matters is the capital. And we sort of psychologically think that we shouldn't sell a stock, but we are happy to take the dividend. Taking the dividend is like selling the stock. It's the same thing. You're taking capital out of the business and you're taking it. So why not sell 9% of the stock a year? It's exactly the same thing. So that's all the argument I'm making. Is like, I wouldn't focus on dividends. I would focus on great companies. And then if you need the income, I'd sell 4% of the great companies every year. And of course, a lot of great companies happen to pay dividends, but that's not the reason I'd buy them for. What thoughts on Nikola? Is that still around? Hang on. Nikola. Yeah. So it's still around. Just, I think it's just a pure speculative nonsense at this point. It was a buy signal, I suppose, somewhere here where it broke out in 13th of June. But if you ever seen a falling knife, this is the definition of it. So would I go anywhere near it? No. No. Why? Why would I? Like, isn't there something better you could find and invest in? Does it have to be Nikola, a company on the brink of bankruptcy? I think there's probably something better. Now, if you're a degenerate gambler and you want to do a flutter, right? Do it, but make sure you limit your risks and do it really small. That's my thoughts on that. What do you think of Polestar? I like it. We talked about it quite a lot. Delivery numbers were impressive. I'm going to Goodwood on Sunday. I look forward to, I see if they're there. NIO is definitely there, so I look forward to seeing them. And if Polestar is there as well, I might just take a few snaps. IDEX doing great. Fundamentally, I think a sound company, not financial advice, but in my view, it is fundamentally a sound company. Craig, I appreciate you saying thank you. And sometimes people get quite agitated when I criticize dividends. that's all right. I don't do it for that reason. I can see the psychology behind it, and if that's the thing that you need to motivate you, that's fine. I'm just saying, like, there is no real difference between selling a stock and receiving a dividend. It's effectively the same thing. You're removing capital from a, same story. Righty-ho, so let's have another last glance at the stocks here, and we're looking green. These are the biggest stocks by market cap, and it's looking very, very green. Amazon, Nvidia, Tesla, Meta, all up. Somewhat volatile this morning pre-market, but all up. And the smaller tech stocks, your sort of NEOs are still up 2.5%. Your Palantir is up 1.7%. Your SoFi is up 1%. So the squeeze from yesterday, the short squeeze, seems to be continuing. That's going to be an interesting one for us, I think. Let's see how far we can squeeze up here. Load the boat. Which place on earth do you recommend for a vacation to relax and think out good investment strategies? Wherever you can relax the best. I mean, I like for relaxation, I like a good beach or a good mountain. Doesn't really have to be anywhere in particular. I mean, there are lovely beaches everywhere. I'm heading to Hong Kong. There's some amazing beaches there, for example. Or you could go somewhere more fancy, like the Caribbean, or Paradise Island, or the Seychelles or something, if you want to go fancy. But often there are like similarly amazing places a little bit closer to home that you just have to climb over a mountain to get to. From your London travels, do you get a feel where the UK economy is going? Not really, I must say, because I must admit I sort of stay in the bubble of the lovely part of London where people don't really have a problem with anything. So no, not really. All my neighbors are basically renovating their houses and polishing their Bentleys. So it's not really, you don't really get much of a feel for it. So no, but I think from the news cycle, yes, I think the less affluent are somewhat struggling or being told that they're struggling, and inflation is definitely an issue. I think in the longer term, I'm very bullish on the UK. I think they have a real opportunity to be a low regulation finance service hub for the world now that they're out of Europe. But the question is, can the idiots in charge pull it off, and will the civil service block them, which seems likely. So that's kind of the challenge there. Janice, hello there to Grand Cayman. So you got some nice beaches too. CPI predictions for tomorrow. Not really. I mean, I try not to, I don't trade on like my instinct on these things because you're wrong 50% of the time. But I would say 3% seems very feasible given look at all the data that I've been looking at, which would be a surprise to the downside and would probably give us a 2% rally or something like that. So that's kind of what I'm looking at there. Good morning from Florida to you too. I appreciate, sorry, I cannot always answer every single question. Do come back. I was going to say tomorrow, but I'll be on a plane the day after. We're live every single day here, and come and join us for a live training today. It'll be a bit of a different format. It's not on YouTube. It's at felixfriends.org/webinar. Links down below in the description, and I'll share with you my entire trading strategy, and I'll literally give it away. Why do I give it away? Because you deserve to know. Nobody's going to tell you. Most traders keep things close to their chest and don't want you to know. I have the opposite opinion. I think if everybody did it, it'd be amazing, and the world would be a happier, better place, and you'd get to the financial and time freedom that you actually deserve. So come and join us. We'll also do some live trading together, and you can see how that turns out. So thanks for tuning in, and thanks for smashing the subscribe button.